Good morning, everyone. Welcome to the Flow Show. Oh, I'm in a bit of a singy mood this morning. Don't ask me why. It's a Monday. I'm not usually in any sort of mood to do anything on Monday. But there you go. Sun's out. I feel like singing. You guys and girls better hope I just don't sing for the rest of the show. I'm no Dale, I can tell you that. Right. Let's get cracking. Get through all the headlines, see what's coming up this week and whatnot. Starting off with some data, PMIs out of China overnight, over the weekend, if I can find them. There we go. So these are the official state PMIs, not the private Kaijing surveys. Manufacturing improving a pip to 50.5, services improving 3 pips over expectations to 50.84, up on prior. So a bit better data out over there. We got a ton of data out from Japan as well, and all coming up pretty green thus far over there. Industrial production up 2.5% month on month. All the other numbers showing positive as well. Retail sales as well coming in, missing expectations for February, year on year at least, but coming in positive. All the other retail numbers coming in positive too. So still good data going on there. There's been a bit of tinkering around by the BOJ. They've cut the amount of super long bond purchases in their quarterly plan. This is for Q2. They basically trimmed their amount of monthly bond buying to 4.105 trillion from 4.50 trillion yen for the quarter. For example, they're going to plan to buy 135 billion yen of 10 to 25 JGBs 3 times a month through April and June versus their prior 150 billion yen 3 times previously. So just a little bit of tinkering going on there. We're coming up to the end of quarter, new fiscal year, also for Japan. And we've had the GPIF saying they're going to keep their key asset allocation targets for the next 5 years. They don't move quickly, this mob. So they're going to stay 25% Japan stocks, 25% overseas stocks, 25% Japanese bonds, 25% overseas bonds. But they have tightened up their deviation limits on stocks and bonds to 9% from 11%. So that's their sort of margins that they can go over those targets by, those allocations by. Obviously, as asset prices move, that can increase the value of funds, and that taking them over their 25% rule. So they've just trimmed that deviation slightly down. So keeping a bit of a firm grip. It all sounds a bit like they're remaining in cautionary pose rather than, we were looking to see whether maybe they'll tilt to more domestic bonds in particular, but it seems not. And they're going to keep that for the next 5 years, apparently. The RBNZ, they're going to continue with their board of 6 members until a new governor is appointed. And it could take 6 to 9 months to get that new governor. That might make voting a bit spicy if it comes down to a split. Data out from the UK this morning. Well, let's look at that first. We had mortgage lending data, mortgage approvals, coming in a little softer than expected, but no great shakes, still decent numbers for that. Mortgage lending as well, a little bit softer, but still looking pretty healthy to start the year off. Bank of England consumer credit data, that dropped back. We saw a bit of a ramp up last month at 1.7 billion. It came down to just under 1.36 billion. Now, last month, that number there, which actually I think 1.8 billion got revised down, was made up of 1.1 billion in credit card spending, which was a bit of a huge jump from the 400 million that we saw the previous month to that one. That fell back in this report to 800 million from 1.1 billion. So Credit card got used heavily last month, got taken down a bit this month. Probably goes some way to explaining the retail's splurge that we saw both in January and February. That latest data I think it was last week. The UK retail sales coming in pretty good for February as well. So looks like maybe some of that has gone on the plastic. Let's see if that use diminishes, and if that happens, then we might see retail sales pulling back a bit for the next couple of months. ECB's Lagarde says we're almost at our inflation target, but can't say inflation is over because of uncertainty. ECB's Panchetta says the fight against inflation can't be considered over. ECB's Nagel, and this was speaking on Friday, the German central bank head, finds the latest inflation figures encouraging, but that we shouldn't get overly optimistic on inflation, on the inflation target. As I said, those comments were Friday, but since then we've had the regional CPI numbers from Germany. First of all, we're going to start off with this import price index, which itself shows hotter prices, hotter than expected month on month, year on year up as well. There was a bit of a boon for retail sales for February as well, following, similar to the UK, following a good January. They've had a good February as well. Let's see if that lasts. But anyway, some green shoots at the start of the year. But anyway, back to inflation. We've had the regional numbers out. Pretty mixed. We've had some down, some unchanged, some up. Overall, no real change, nothing big at all. So still looking a bit sticky-ish over there in Germany, which goes against what we've seen in France and Spain. Italy as well, coming in with some hot CPI numbers. CPI up to 2.0% was expected unchanged, 1.6. The Eurozone measure also jumping 4 pips. So Germany is a bit stickier, Italy is a bit stickier, even if we've seen softness in France and Spain. So they're not out the woods on that. We have got some politics to deal with this week from France. It's all kicked off today, started today. Francis Le Pen has been up in court, and she's been found guilty in the case over the misuse of EU funds. Now, the hoo-ha that's to come is whether her sentencing rules her out of running for the election, and whether that conviction goes. But it's all a bit up in the air. I don't understand the super nuts of it. I did put a tweet thread in our chat room, in the newsroom, if you want to have a look at that. To see what's going on, if you can make sense of it. But there's going to be a lot of constitutional wrangling as to whether that sentence, or whether any appeal of that sentence, stops her from running or not. Because the sentence officially would stop her running, but if she appeals, they don't know whether legally, whether it's against the constitution, whether that she can stop running while she's under appeal. Anyway, that's the bum fight to happen in France. Never a dull moment, so keep an eye on that. That'll be kicking off. It's already kicked off today, and that'll be progression, I think, tomorrow and through the week. Going back to the US data last week, PCE, bit of a bore off in the end, because Mr. Powell dropped the nod, and he was 100% correct again. He said PCE was expected to come in at 2.5% with a core at 2.8%, and it came in at 2.5% and 2.8%, as you can see there. So he's really, that's the second FOMC he's tipped a nod to those numbers, and the second time they've been absolutely right. So who says the Fed doesn't get data in advance? If you and me got that, we'd be up before the beak, I can tell you that, but it's all right for those guys. Anyway, no ranting on a Monday. Amongst those numbers, the supercore, the good old 3-digit supercore, came in at 0.372% versus 0.220% prior, so higher there on the month. Year on year, also up 3.341 from 3.096. So some of the underlying core measures still looking very hot over there. That'll keep the Fed on hold for a little bit longer. As far as the rest of the PC data, income and spending was there or thereabouts. Income up 0.8%, beating expectations. Spending a positive from last month's negative, but not as high as expected. But still okay, nothing to write home about, nothing to get up in arms about either. Canada, they had their monthly GDP out. Decent number, 0.4%, though they expect a flat February, but they've kicked off the year in good fashion. So their GDP has been on the slight improvement over the last couple of months. So again, maybe some New Year green shoots for those guys too. We also got the final Michigan survey data out. This is a number that everyone keeps telling me doesn't matter because it's all politically biased and this, that, and the other. I say I don't care. It moved markets on Friday. That's all I'm interested in. But I am interested in the numbers anyway because they are all following a pattern that we're seeing, not just here, but everywhere else pretty much. So the headline number came in worse. This is the final number. So 57, it came in worse than the flash 57.9 and most definitely down on last month. All the other measures down as well, except for current conditions, which just improved slightly over the flash number, but still down on last month. But more notable, again, these inflation expectations. You don't often see these moving too much on the final number, but we saw a 1 year jumping to 5%, the 5 year jumping to 4.1% from 4.9 and 3.9 respectively. Now, just to put this in a bit of context, okay, and we'll look at the chart. We are up at levels when inflation previously and inflation expectations were 5.4%. Inflation was running up closer to 10% when this was happening. So we are up to levels of expectations that we were at over the big inflation blip. So central bankers keep ignoring these numbers, keep brushing them under the carpet, saying it's all temporary. They may be proved right. We haven't got to look too far back in history to see when they were proved wrong. So I'm still keeping an eye on these numbers, no matter what people think of them. Fed's Daily says 2 cuts this year is still a reasonable projection, but we do need to see. We do need to wait and see on monetary policy. We had one of the Fed Regional Bank nowcast thingies being chucked out. And I'm only keeping an eye on these just to get the mood of the market and how it's going to react to this sort of stuff. So for Q1, the last number was 2.72. This one last week came in at 2.86. So a higher revision for growth for Q1 that we're just about to close off. Q2, that went down a pip to 2.63% from 2.64%. Goldies, they've been out with their Tipex. They now expect the Fed to deliver 3 cuts this year instead of the 2 cuts they forecast previously. I doubt they're the last, or I doubt they're the first, and they won't be the last, given the market mood at the moment. Right, onto all the tariff crap. The EU is apparently going to plan concessions for Mr. Trump after all these reciprocal tariffs hit. So they're looking at maybe smoothing the way rather than getting into a fight about it, which will be right up Trump Street if they do that. Trump was out Friday saying we will absolutely follow through with the tariff promise on Canada. Then later on, Carney and Trump apparently had their phone conversation at last. Carney said that Trump gave no guarantees on backing down on autos, steel or aluminium tariffs. He also said it's unclear whether there'll be new trade talks between the US, Canada and Mexico. Canada would prefer that Mexico be part of those discussions. Then, not long after that conversation with Carney in those lines, Trump came out saying he's willing to make deals on auto tariffs, but deals on averting auto tariffs would come later. So that suggests that he's going to drop these tomorrow and then look to get a deal. But it's all open for this Proxy Liberation Day, whether it's bloody called. They do like making up names these days. New York Times are reporting that Trump or the White House may be looking at a bailout for farmers in the event of reciprocal tariffs being placed on the US. They haven't used much evidence for this, except to cite that that's what he did last time when they had the tariff bum fight with China over agriculture. So that may be something that's lining up. A sources piece, prepare for that to be shot down at some point. Trump then says he will be announcing pharmaceutical tariffs soon. Just a reminder that tomorrow's deadline is about certain subjects. There are plenty of other sectors and areas that he would potentially be targeting. So he might be announcing pharmaceutical tariffs soon. Ukraine stuff. Zelensky has been out and about. He says Ukraine will not recognise US military aid as loans. He says that Kiev has received a draft of the new minerals deal from the US, and it's an entirely different document to the previous framework. And meanwhile, that's all sitting with lawyers anyway. We've supposedly still got this energy infrastructure ceasefire going on, but still we've got both of them lobbing stuff at each other and blaming each other for this, that, and the other between Russia and Ukraine. So we're still not any closer to a resolution. Trump's seemingly, as the press put it, getting pissed off with Putin over all this negotiating stuff. So he is apparently looking at raising tariffs on Russian oil and on countries who accept Russian oil. So one minute he's trying to get a deal done, next minute he's pissed off with Putin. So we're nowhere near the finish line for this one. Let's hope things don't sour. Right, that's about it on the old headline front, covering what we saw last week. What we're going to do now is have a quick look at what's coming up this week. Get my calendar out. There we go. This is my calendar, just gives me a decent quick overview of what's coming. Obviously, it's big jobs week this week, NFP on Friday, and it's a double header with Canada jobs as well. But anyway, let's go back to today. Not an awful lot. That Chicago PMI, which always keep an eye on markets and prices 2 minutes before, because subscribers to that get that data 2 minutes before. So if you see a sudden wobble in the dollar at 143, then you know which way that data is likely to have come out. Not a lot else out from there. Bit of data from Japan over in the evening. Tuesday, we've got the RBA coming in nice and early. Market expecting them to remain unchanged, but some are looking for a bit of a dovish slant. I think there is a bit of a risk that they could head that way and get a bit dovish on the tariff stuff like everyone else is. They'll certainly probably put out uncertainty lines left, right and centre like everyone else as well. So it'll either be announcements where they keep rates unchanged and they don't know what they're going to do next because of all the uncertainty, or they might, like Canada, think, right, we might try and get ahead of any potential trade upheaval by cutting rates quicker than everyone expects. So I don't think it's as straight a line as what the expectations are, just to remain unchanged. Then we start getting all the final manufacturing PMIs in the Eurozone and elsewhere all through the morning tomorrow. And then we get the US final PMI and then the ISM coming out as well, and JOLTS data too. So that's where we get our first jobs impact from all that lot. Wednesday, fairly quiet one. Get the NBA stuff, ADP, obviously, and US factory orders, but apart from that, pretty quiet Wednesday. Thursday, get a bit of Swiss CPI, so keep an eye on that in terms of what happens and what thoughts are for the SNB at their next quarterly meeting. Then we get the services PMIs coming out as well. Again, that culminates in the US ISM later on, and that will obviously get looked at for what it means for the NFP on Friday. And on Friday, not much out from Europe. And yeah, then it's into the jobs week. I'm not going to be here from Thursday because I'm off on my jollies, taking a little break. I want to go and get some sun myself. So K-Man will be back on Thursday. He arrives back into the country on Wednesday, but I'm not sure after a flight from Japan what sort of state he'll be in. So probably pencil him into coming on Thursday. I will have the NFP competition up if I can get it done later today, so you can have a nice early run at that, and I'll get all the links up on tomorrow's show. So that's what's coming up this week. Plenty to get stuck into. Obviously, Tuesday, it's Liberation Day, whatever the fuck that is, and we find out what's happening with tariff. So we're going to be in headline mode today, tomorrow, Wednesday, Thursday, Friday, while we deal with all that sort of stuff. So it's going to be a bit of a hairy week for currencies, particularly the likes of the euro, CAD, MEX. So really all bets are off regarding the techs for now. I'm going to trust them a little bit less while we go through all this stuff, because headlines are going to rule the roost once again. And on that front, it could go either way. It does feel like there's a greater chance that a lot of these tariffs go on and they're heavy and they're going to stick. But there's still a chance that last minute deals are done, deadlines are kicked, stuff's averted for now. But it does feel at the moment like the market is thinking, yeah, these ones are coming, no more deadlines, and we're going to have to deal with the follow through from that. So that's my early thought on that. Anyway, yeah, brand stick to major levels. Now, one thing I want to point out quickly, for those of you in our chat room and who follow the Flow Show on the socials or whatnot, we've had the clock change in Europe now. The UK is on BST, which is an hour ahead of GMT. Okay, so if you're looking at want to know what's going on here in the UK, then look at BST or add an hour to GMT. Okay, the Flow Show is at 10:30 every single day at UK time. Okay, so whatever time it is in London, it's 10:30. Okay, not GMT, it's 10:30. Okay, it doesn't matter if that's GMT or BST. Okay, we are 10:30 UK time. So you've all got Google. That includes you, Bran. You're one of the worst for getting caught up in clock changes and whatnot. So it's quite easy to Google what time is it in London now, and then you'll work out when the Flow Show is. But yeah, we always have this. The emails need to be changed up and tweets and whatever. So that should be fixed later today. Right, let's get shot of that. Right, so, well, we're on dollar MEX, so might as well kick off with that. This one looks to have been affected more by the tariff threat right now than perhaps dollar CAD, which I'll show in a minute. Can't rule out seeing similar moves to what we've had previously around these deadlines. Again, if we do get bad news, then I wouldn't be surprised if we're up having a look at the top of this zone. I've got the stop on my shorts that I was knocking into up here, just above this 2060 level at 65. So if that gets knocked out, then we're probably going to be heading up to these levels, maybe even up towards 21 again, which I may look at to short again. But as I say, I've got just a slightly different vibe about this one than I did previously. I was happy to short into this because every time we've got a can kick and every time we've got people trying to get a deal done. And the same is happening. Both Canada, Mexico, and others have got representatives literally parked up in Washington daily, it seems, trying to get deals done. So that's still a possibility. But it's going to be a potential light switch thing. If it's good news, we're probably going to be down through 20 again and heading much lower. It will happen very fast and very quickly, and probably very violently as well. Same on the other side. The market has been building back into the risk of tariffs coming on, but it doesn't mean we don't get a confirmation pop higher, and then we see how bad they are, and we can make a decisions and then see what happens with things like ranges. So dollar CAD as well, not bouncing as strongly. Okay, we're up 100 pips odd, but we're still in this range, still respecting the bottom of it at times. still got every chance of having a look to the top or busting out the bottom, depending on what the news is. But even when we've pulled out this range, we haven't really held on to it. So really got to assess the news. I'm not looking to do anything, trading little levels in between or anything in the meantime, because I just want to hear what's coming and then make a reaction decision to that. One trade I've been kicked out of is my old Aussie Kiwi. Typically, trader's luck. I got stopped out bang on the high overnight. It hasn't even recorded 110.25 anywhere. But I got done on my offer on my trailing stop, which I parked just above this level here. So I'm all out of my trade. I've been knocking it short from these highs here and cutting it and adding back and cutting it and getting out. So it's been a decent trade and I can't complain about it. I was thinking about moving my stop this morning because of the RBA, just in case they pull a surprise. I was going to move it a bit higher up, but I haven't got a chance to do that now because I'm already out. I'm not looking to get back in at the moment, but I may, if we do get any further rallies up towards these sort of areas again, play the range. It's been a decent range to play over the last few months, so I may look to do that again, depending on the news and the reason we're going out. We're going up there, but I'm all out of that at the moment, which I don't mind too much because I'm, as I say, I'm taking a break, so reducing the book is not the worst thing I can do at the moment. So I just keep an eye on the charts as well. I did have a little nibbling cable up towards 130 into the fix on Thursday. That got trailed out. Was getting out down in these areas, but that's now been knocked out on my trading stop at 70. So I'm flat there as well. We're still in the hunt for this 130. We have got the last day of end of month today, of course, so keep an eye on those, on the clocks, around the hours and whatnot, and particularly the last fix of the day tomorrow. But also, sorry, the last fix of the day today at 4 o'clock, the London fix. But also keep an eye out tomorrow, because particularly when you get these quarter ends, half year ends, that sort of thing, you can see a little bit of flow going through the fixes in the first of the month, particularly this one, because it's a change of fiscal year. So any books that have been closed up for this fiscal year, they can put new stuff on in the new fiscal year. And again, that's, you'll see some action around the fixes. So don't think it's all over just because it's the new month tomorrow, and April the 1st tomorrow as well. So don't be made a fool of by not knowing what's going on in the fixes. Dollar yen, that looks like it's potentially breaking down. The 150 level was where I was looking at a bit of a level. I actually tried a bit of a long, took a few pips on a bit and then got knocked out of the rest on Friday. We're not breaking down just yet. We have, depends on how you want to draw your lines, really. You could say that we've sort of broken down from there. Oh, no, too bit of a wobbly one. Let's get rid of that. So you could say we've sort of broken down from those lows, but we could also have just extended the range a bit. Okay, so we're still in it. It's how you draw it. Okay, I wouldn't say we've broken down yet. If we're under this 149 area and holding below this 149, then particularly 149.80s, then it's going to be looking, and definitely if we're under 148s, then we're obviously breaking down. Okay, and we've got every potential to hit that low or even continue this move, and this will just look like a bit of a short-term dead cat bounce. Okay, and a lot of bear flaggers are looking at this one, but it's not happened just yet. 148 is going to be the cruncher. If we're knocking it out, then there's every chance we're, as I say, heading at least to those lows down here, maybe something more depending on what's driving us down there. So that's dollar yen for you. Dervais, you want to look at dollar Swissy? Okay, still respecting this 87.50s. We were trying to do a bit of ping pong between the fibs, but we're still pretty much going sideways. But this is still looking very dead cattish at the moment. But it's looking more consolidatory right now than it is. We've seen these little uptrends. So what you can see here, imagine this is dollar yen that I've just showed you. Okay, so we could break down, but if we hold the prior low, then we bounce again rather than continue to break lower. It's not bullish, it's not bearish, it's in the middle. The fact we can't rally too high keeps the bearish trend, the wider bearish trend in play. But it's looking like we are just maybe going sideways a bit. It's always possible that the S&B have got a bit of a smoothing hand going on in this one. But levels wise, you know where you are. You need it above 88.40.50, and I know some of you are pointing that out last week, more so above 88.70.80, getting up towards 89s for that. If we're getting under 87.50, then we're potentially breaking down, and we're going to go and have a look at the 61.8 down there. You're out as well, Marcus. Yeah, well, I hope you made some pips out of it, mate. I'm assuming talking about, what you're talking about. You're talking about the Aussie Kiwi as well. So either way, I hope you made some pips out of it as well. Marianne, dollar NOK. Yeah, I'll have a look at dollar NOK for you. The NOK have still been doing well. Completely carved through heading through these lows here. So let's get rid of that fib first and foremost, because it's dead and buried. But look, we've hit this level down here, 10.45s, and that seems to have stopped the rot for now. Okay, so depending on what you're looking for, Marion, you're long from 10.51. Okay, so you're just above this level, so you know where you're going to start being wrong if that starts breaking. You've got a bit of a safety net down here, 39s. So depending on how deep your pockets are, how you want to manage the trade, you've got this first level here, 10.45, you've got 39s. If you're breaking below there, then it's probably going to go a bit wonky, and we're going to head much lower. Right, Marcus just playing the range. Yeah, so dollar NOK, the bounce is looking very limited at the moment. So you've got to be careful with longs because these bounces are looking very weak. We've had 2 goes down here, but we can't get above 10.55s. So, Marianne, I don't know what your plan is overall, but I'll be very, very careful if we can't get back above 10.55 anytime soon, because then we're going to play the knocking on the door too many times game. And if that's based on this trend, that means we could be heading lower rather than higher. But your boundaries, 10.55s, 10.45s, 10.39s. You can guide your trade from that one. Let's have a look at gold. That's coming off a little bit. Let's go into me short-term charts. So one thing I want to point out that I noticed, let's come in a little bit. We've had, again, and we had this before when we were breaking up through the 29s, I think it was, maybe even before that, when we had a period of Asia buying overnight. Each day we would see some Asia buying. We're getting a bit of that as well, and it started since Trump started dropping all his started getting heavy on tariffs last Wednesday. So round about any time between sort of midnight, 3 a.m. UK time GMT, we're seeing some green candles popping up, some decent sized green candles popping up. There's one there, 2 o'clock on Thursday. Come a bit later, midnight Friday through to 2 o'clock, another rally there. 2 o'clock this morning, another rally there. Okay, so we're seeing this Asia kicking off by buying. Okay, we've seen it before, be it Chinese, other central banks or whatever. And it's perhaps not a surprise that it happened when we got a bit of a risk turn, as I say, last Wednesday when Trump started getting all heavy on tariffs again. So just keep an eye on that if you're watching gold. We're seeing a bit of Asia buying at the moment. And if you remember that from prior flow shows, that could go on for several days. Okay, what it does after that is, you probably get people just waking up in the morning, seeing it high, and then having to chase it. For now, where are the levels? Okay, so these two levels were drawn last week. They were white. I've turned them pink or purple or magenta, whatever you want to call them, just because they're old. I've stuck in a couple of new ones now where potentially we're going to see some support. It's pretty much every sort of $10, okay? But as you know, I like to let the levels develop. We're going to get probably some support into the 31 figure. So just keep an eye on that from here. We've got a very short-term top here, couple of hours. That's nothing to hang your hat on. But the fact that we had that high and we couldn't really take out that high in this move, at least it starts to build a bit of a picture here. So let me chuck a line in there. We can keep an eye on it. Oh, where am I going? There. Bingo. Okay, so we've got something to watch up here, because I know all you rally sellers like to try and jump in and pick the top on stuff. Okay, not my game. I'm long on the breakdown here. So I've been slicing and dicing, took a bit off at 18 this morning when I woke up. So I'm looking just to see whether we can keep holding support. So this area down here is really your first key area. Obviously, the break point down here is your major area for now. But as usual, let the levels build up, let them develop, see where the lines are going to pull up, and then mark your charts accordingly. Marianne, you're talking about your dollar knock. So you're moving your stop to break even. Okay, so you got yourself covered. That's the least you can do, Marianne. Then at least you know you're not going to lose money. And if you can do that in every trade, then everything else is a bonus. Morning, Angela. Right, what else? Anyone else got anything to have a look at? Let's have a look at yields, because they're obviously going to be important again. We are seeing a bit coming off. Let's go into a bit of a wider chart. So JGBs have seen a little bit of easing now. Still up at decent, very high levels. And we know that the market's been questioning, shall we say, the BOJ over what they're going to do with yields. Cutting back on their tinkering with their bond buying can be a bit of a signal that they're watching, ready to act, that sort of thing, rather than the act itself. But we'll keep an eye on that anyway. US yields, they're going to be in focus this week. 2 years breaking down below 420 again. So we had this break up above 434. Looked like we were off to the races, but look how that's washed out. And now we're coming back down to 420. So we've got this tariff stuff going on, and the market's still getting a bit, still looking a bit bearish over the US, even while inflation remains sticky. So it tells you that growth is more important than inflation at the moment in terms of what the market's thinking. The Fed trade isn't much. Okay, it's probably one of the few times in the last few years when central banks have been the lesser of thinking for the market. So we're not massively trading central banks at all at the moment. So keep an eye on these yields. We're breaking down. The dollar is going to follow, and that includes dollar yen as well, obviously. Right, anything else for anything else? Or we shall call that a nice early session for today at 10 past. Last orders, last knock-ins, going once, going twice. Done. Thank you very much, everybody. Have a great day all. I'll see you later on Face. And yeah, have a great week, have a great day, and I'll catch you tomorrow.